Welcome to Azzad Asset Management's webcast on using alternative investments in volatile markets. As the title explains, we're here today to talk about ways to mitigate some of those ups and downs we've seen in financial markets over the last few weeks. Specifically, we're going to explore today how certain alternative asset classes like Sukuk can help you weather the recent storm we've seen in both equities and bonds. Moving on to slide 2, here's a quick rundown of what we'll be discussing today. The focus of the webcast will be on that third section of your screen, alternative investments and how they hold up in various market environments. And hopefully we'll have a robust discussion at the end with our portfolio manager. Let me just mention at the outset, though, that overall what we saw over this most recent period of volatility was a good showing of the potential of liquid alternatives and the strategies that employ them. So today we'll show you how the Azzad strategy held up and why you should consider it as a core holding in your portfolio. So with that, let's go ahead and meet the lineup for today's webcast. Just a reminder that this presentation is also being recorded. Slide 4, your presenters for today. Starting on the left, Mr. Ihab Salib, Head of Fixed Income Investing at Federated Investment Management Company and Portfolio Manager for the Azzad Capital Fund, which we'll be talking about today at length. Ihab will be joining us to take some questions about the strategy from the man immediately to his right on your screen. That's Mr. Jamal El-Barmil, who's Azzad's Vice President. And I'm Josh Brockwell, Investment Communications Director here at Azzad. I'll do a quick run-through of who we are and what we do, and then we'll get right to the meat and potatoes of today's presentation. Just some quick background on Azzad. We're a boutique management firm located just outside Washington, D.C. Investment management is our business. We're registered with the SEC as a registered investment advisor and work with clients nationwide. In addition to serving as independent financial advisors, we manage and sponsor 2 publicly traded mutual funds, including the Azzad Capital Fund, which, as I mentioned, we'll cover today, as well as model portfolios for institutional and retail clients. Let me very quickly touch on the Azzad Philosophy. We are probably different from some of the other advisors you might come across if you're not familiar with us, and one of the main reasons for that is our dual mission philosophy, and this mission focuses on generating competitive, long-term financial returns while using investment capital to promote a sustainable economy and a positive social impact. Our vision at Azzad is a world in which investment capital helps to build a sustainable and equitable economy. As such, all of our products and investments comply with halal investment guidelines as established by the Accounting and Auditing Organization for Islamic Financial Institutions, also known as AOFI. This means we steer clear of investments that run afoul of Islamic principles. No companies with impermissible lines of business like alcohol, pornography, weapons of mass destruction, financials, and the like. We're also a member of the Forum for Sustainable and Responsible Investment. So with that little intro out of the way, let's now briefly touch on volatility in general, where we are today and how we got here. And for that, I'll turn it over to Mr. Jamal El-Barmil, Azzad Vice President. Jamal?
Thanks, Josh. I think one of the reasons people are attending the presentation today is because of recent market volatility. Before we explain how alternative investments like Sukuk can help mitigate volatility, let me put things in perspective. One important point everyone should remember is that ups and downs in the market are nothing new. Stocks and bonds have experienced different levels of return over the past 88 years. Although stocks exhibited tremendous volatility before World War II, the stock market has been much less dramatic since that time. Conversely, bonds exhibited stability in earlier periods, but have seen dramatic increase in volatility over the past 30 years. One relationship has remained constant. Stocks have been more volatile than bonds on a month-to-month basis. And now, a brief word about your asset mix. When developing an asset allocation policy, it is important to understand the risk and return relationship of the assets being considered. The image illustrates the risk and return relationship of 5 traditional asset classes based on performance over the past 88 years. Small stocks have exhibited the highest risk of all asset classes shown. Small stocks' high volatility, however, has been accomplished or accompanied by high returns. At the low risk of the spectrum, cash equivalents or treasury bills, these investments have demonstrated very small fluctuations in principal, but have historically offered lower returns as well. The goal for most investors is to select and combine assets in an efficient manner in order to meet your future needs at a risk you feel comfortable with. Diversification does not eliminate the risk of experiencing investment losses, but it is an important part of portfolio management and helping to make sure that you have an appropriate level of volatility for your desired return. Here is how volatility can be mitigated with stocks and bonds, 2 traditional asset classes. Although bonds are considered less risky than stocks, the minimum risk portfolio does not consist entirely of bonds. The reason is that stocks and bonds are not highly correlated. That is, they tend to move independently of each other. Sometimes stocks returns may be up while bonds, are down, and vice versa. These offsetting movements help to reduce overall portfolio risk or volatility. As a result, adding just a small amount of stocks to an all-bond portfolio actually reduced the overall risk of the portfolio. However, including more stocks beyond this minimum point caused both risk and return of the portfolio to increase. So we have established that volatility can be mitigated with diversification, and the more diversified a portfolio, the less the likelihood of a downturn in a particular asset class may take down an entire portfolio. The recent volatility we've seen in the market is the primary reason to diversify to other securities that don't have the same or don't behave the same way. The next few slides deal with how the Azzad Capital Fund, which includes alternative asset classes that don't perform the same way as stocks or bonds, can help even to further diversify your portfolio further away. This chart shows how Azzad Capital Fund, ticker symbol WISEX, W-I-S-E-X, compares to the stock market during a volatile period, as we saw from the beginning of September. As you can see, the Azzad Capital Fund was relatively stable, while the stock market was noticeably more volatile. It shows you the advantages of owning exposure to alternatives like those in the Azzad Capital Fund, which we'll explain in detail momentarily. Now, let's acknowledge the obvious here. In historical perspective of the stock market, a few weeks is a relatively brief moment in time, but this most recent period of volatility is really the first time alternative strategies have been able to show their worth. Thanks to the efforts to stabilize the market and inflate assets by the Federal Reserve, global markets have been relatively quiet in the past 5 years. Many alternative strategies, including the Azzad Capital Fund, were launched during that time. So the past month has given investors a pretty good measuring stick, I would say. And according to the mutual fund data provider Morningstar, more than half of the liquid alternative funds on the market having been launched within the past 2 years, so many are getting tested for the first time. This slide shows WISEX versus the bond market since September. Here again, not as much loss from WISE on the downside. And here's a look at the fund since inception. As you can see from this chart, the fund has exhibited less volatility than both domestic and the emerging market fixed income markets. Let's talk a little bit about the downside risk. Ever since the global financial crisis, investors' priorities have changed from a main emphasis on investment results, investment returns, and alpha generation to an emphasis on diversification and downside protection or capital preservation, especially in the case of a steep market downdraft. This chart shows the specific downside risk of the Azzad Wise Capital Fund as measured against its bond index peers, both domestic and emerging market, over the last 4 years.
All right, Jamal, thanks very much. And to speak in more detail about the strategy, we are pleased today to have the lead portfolio manager for the Azzad Wise Capital Fund, Mr. Ihab Salib, with us. Ihab will take some questions from Jamal and briefly from the participants after Jamal finishes with his first line of questioning regarding the fund's volatility.
Okay, thanks, Josh. Ihab, thank you for being with us today. So we're making the argument here today that the Azzad Wise Capital Fund, our fixed income mutual fund, can be used to create a unique risk-return profile for your portfolio using alternative investments. Ihab, can you tell me how you use alternative asset classes to achieve the fund's objective?
Of course. As you know, the fund's primary objective is capital preservation and secondarily its income. Our concentration in Sukuk and Islamic bank deposit bonds give us the return we need to our investors, our shareholders, without a lot of the ups and downs that are typical of erratic markets. Of course, this can also be important for investors who are looking for an asset mix with more diversification.
Oh, thank you, Ihab. And here's a rundown of all the alternative asset classes the Azzad Wise Capital Fund gives you access to. The fund seeks to preserve capital and provide fixed income. We don't have a big appetite for fluctuation. Due to the lack of Islamic fixed income options in the U.S., we structured this fund for exposure to emerging markets. Ihab, I want to talk to you, through the things that you see on the screen here one by one. First, can you tell me briefly how Sukuk or Islamic bonds are structured and how they are different from their more conventional peers in terms of volatility?
Sure. Without going into too much details, Sukuk are sometimes referred to as Islamic bonds. They are about 200 billion in size and are traded all over the world. Simply put, they are bond-like instruments that can deliver greater diversification and do not perform the same way as their bond counterparts perform during periods of high volatility. Given the investor base of the Sukuk market and their tendency to be more buy and hold investors, Sukuk are less volatile than traditional bonds, at least in the short term.
Okay, thanks, Ihab. And Islamic bank deposits are next on the list here on the screen. Can you elaborate on their structure and their alternative characteristics?
With Islamic bank deposits, when you put your money with a bank, you are investing in the primary market. Islamic bank deposits, which are sometimes considered cash equivalent, offer greater expected return through the profit and loss sharing ventures with the bank acting as an agent on behalf of our shareholders. In addition, these bank deposits also have minimal market risk, which translate again into lower volatility for the fund.
So everything here relates or tends to give the fund lower volatility. Okay, and speaking into that concept, let's talk briefly about the new investments that you are planning for the near future.
Yeah, we're very excited about our plans. We're planning to add 2 new asset classes to the fund. The first one is Murabaha Trade Finance, which, like bank deposits, has relatively low market risk and therefore is expected to reduce the fund's overall volatility even further. The second type of alternative investment we're looking at in the fund is referred to sometimes as profit rate swaps. It's another Sharia-compliant way to hedge against interest rate volatility. We expect that this will further reduce the volatility of our Sukuk holdings and, again, by extension, the overall volatility of the fund.
Okay, this slide here, we see the performance and the holdings of the fund. Ihab, care to comment?
Yeah, note that more than half of the fund's allocation is in Sukuk. The second largest holding is Islamic bank deposits. Both of those alternatives account for that uncorrelated performance we saw in the earlier slide you mentioned.
Thanks, Ihab. And speaking of correlation, this next slide shows how Azzad Wise Capital Fund diverges a bit from bond indices. The fund generally shows low correlations against conventional fixed income markets. Ihab, can you comment on this, please?
Of course. As we explained earlier, holding alternative assets like bank deposits and Sukuk tend to have low correlation to the fixed income markets in general. And that's what you want, uncorrelated assets during periods of extreme volatility or times of crisis.
Okay. And Ihab, we are going to try to make some questions from the participants in just a minute. But let me first set the stage here. Your firm, Federated Investment Management Company, is one of the biggest players in the fixed income space. As the sub-advisor to the fund, you took over the day-to-day portfolio manager duties of the Azzad Wise Capital Fund in June of this year. So only just few months here, you had some exciting moments already. Can you tell me how it's been managing the fund during this most recent period of volatility?
Of course. First, we're very excited to be and honored to be the new sub-advisors for the fund. The fund falls very well within our framework of capital preservation. Federated, again, is a company that made its mark in the money market business, which is all about capital preservation. In terms of the market over the last few months, it's been pretty volatile. You had the Russian geopolitical risk, the ECB policy changing, Scottish referendum, multiple other geopolitical risks all around the globe. That put us in a situation where you had very volatile equity markets as well as fixed income markets. But I think we've navigated through them quite well.
Excellent.
Okay, with that, I think we're going to open up the presentation to the participants on the call. If you're interested, we have two options. One is simply unmuting your line. They're all currently muted. They're in question and answer mode. You would press *6 to unmute your line and ask your question. Also, as an alternative, you can ask a question in the chat room by clicking on the little conversation bubble there, which should be at the top of your screen. Feel free, any brave souls out there who are willing to do that, you can unmute your line with *6. There is a question in the chat room. I will go ahead and start with that. Ihab, if you want to respond, it says, can you educate me on profit rate swaps, what they are exactly? So I think that was one of those prospective alternative asset classes you're looking at holding in the fund going forward.
Sure. One of the biggest volatility-inducing parts of the fixed income market is the change in interest rates, the rising interest rates. One of the ways to hedge against that in a Sharia-compliant way is the profit rate swaps. So you can have a certain portfolio with exposure to interest rates, but if you think interest rates will rise, you utilize profit rate swaps to lower that volatility and hedge against those rising interest rates in a Sharia-compliant way.
Okay. Thank you, Ihab. Any other questions out there? Star 6 will unmute your line, or feel free to ask one in the chat room. I do have a couple others for Ihab, and Jamal, feel free to jump in here as well.
Yeah, I have a question for you coming from the participants. What is the outlook of both stock and bond markets in your view?
Well, actually, probably more of what we just talked about, increased volatility. You have the Fed finishing its tapering program this year, so a lot of uncertainty what will happen next from that angle. You still have multiple geopolitical risks, issues, whether it's in the Middle East or in Russia and Ukraine and that part of the world. And then you have Europe on a kind of a downward trend in terms of growth, and that's causing also a lot of volatility because people just don't really know what's going to happen to one of the largest economies in the world. So overall, we expect increased volatility in most financial assets and financial markets over the next several months.
Okay, and a follow-up question here, based on the market outlook, how can the Azzad WISEX Chapter Fund be part of like an asset allocation program to reduce volatility?
Well, again, if you have a lot of volatility, volatility tends to hit risk assets a little bit more. What are risk assets? Equity. So if you have a large equity portfolio, having a portion of your portfolio allocated to, again, this alternative, less correlated or negatively correlated asset class, where will improve your risk return profile during this period. The fund, again, even though we expect rates to rise, tend to have lower sensitivity or much lower sensitivity than other bond funds to rising interest rates. One, it's because that's how we designed the whole fund, to preserve capital, and two, our actual current positions in the fund are designed to have less sensitivity to rising interest rates.
Can you talk more about this sensitivity, the duration, and how the fund is handle that?
Yeah, there's a measure of sensitivity to interest rates called duration, and basically, if you have a high duration number, you're more sensitive to interest rates. If interest rates go up, the prices of your bonds or portfolio will go down. Most bond funds out there will have a duration of 4, 5, 6, 7, 8 years. Those are very sensitive funds to rising interest rates. Interest rates can rise, not even 50 basis points, and your entire income for the year is gone. The Azzad WISEX Capital Fund actually has a duration of just about 2, which is fairly low, but what it really means is that it will be much less sensitive to rising interest rates. So we expect rising interest rates. We want to have that transition from low rates to higher rates. We want to be very aware of that and not experience any capital loss during that transition in rates again.
Excellent. And talking about the duration, also the design of the portfolio itself lends itself to that. The bank deposits and the prospective investment, the Murabaha trade finance, also be able to reduce the duration even further.
Yes, absolutely. These are, again, they're by nature, bank deposits and Murabaha trade finance, by nature, they're either floating rate assets or assets that have very short maturity or again, very low duration, most of the time below 1. So utilizing those assets in periods of rising interest rates gives you very good income, reasonable return, but without experiencing any downside as rates move up.
Okay, excellent.
And Ihab, we have another question from the chat room. It's regarding the 7% investment or allocation in the fund to stocks. I believe that was taken from the allocation pie that we showed earlier in the presentation. The question is, should I take that into account when figuring my asset allocation ratio, or should I treat WISEX, ticker symbol WISEX for the Azzad WISEX Capital Fund, as a black box bond-like instrument? You want to take that?
Sure. I think, if you look a little bit closer at the holdings of the fund, those tend to be lower volatility equities that are there to give even further diversification within the fund while providing reasonable income. And we manage that actively. It's not always going to be 7%. If we think equities will go down significantly, it can go to 0. If we think equities are a good relative stabilizer to the fund and give good returns without too much risk, we might be up at 7, 8, 9, up to 10%. So I would look at the fund as if you have a portfolio that's dominated by equities, I would just look at the total fund as pure fixed income that is negatively correlated or very low correlation to the rest of your equity portfolio.
Okay. Thanks, Ihab. Are there any other questions from the presenters? Again, *6 will unmute your line. If not, in the interest of time, we're probably going to wrap it up. I think that's a tight 30 minutes. So with that, we'll go ahead and conclude today's presentation. I want to thank everybody for your time. And I'd like to also thank Ihab, Salib, and Jamal Barmeal for being with us today. Just a reminder to visit our website at azzadfunds.com, where you can download and read your copy of the prospectus for the Azzad Wise Capital Fund, which we've talked about today. The prospectus contains more information about the fund's risks, expenses, and investment strategy. And while there, you can also sign up to receive our monthly e-newsletter to get more information about Sukuk and other Islamic financial products and services. Finally, be sure to follow us on Twitter. @AzzadFunds is the handle, and like our Facebook page, facebook.com/AzzadFunds. Let me also note that a recorded version of this presentation will be posted to our YouTube channel, which is youtube.com/AzzadFunds in the very near future. So be sure to check us out there. Thank you again for your time. Thank you both, gentlemen, for being with us today.
Thank you, Josh.
Thank you.
And have a great afternoon.
Thank you.